Welcome to Multiple Perspectives. I'm David Lofgren. Alternative assets have become increasingly accessible to retail investors since the passage of the Jobs Act in 2012. Adding to that accessibility is the option for investors to use retirement savings in the form of a self-directed IRA to diversify their investment portfolio. In this episode, I'm excited to sit down virtually, of course, with Tara Fung, CRO of Alto IRA. Alto is a great platform that serves as an IRA custodian, making it simpler for individuals to navigate what was historically a pretty complex process of self-directed investing. And they serve as an alternative asset guide of sorts, connecting their investors with a wide array of alternative asset marketplaces. Tara joined the team at Alto this past summer after discovering that she too could use her retirement savings to invest in a work of art. I had a great time sitting down with her to learn more about the nature of self-directed IRA investing and the tax advantages this investing strategy provides. Without further ado, here's our conversation. Tara Fung, welcome to the podcast.
Thank you so much for having me, David.
I'd like to start by asking you to share a bit about your background. You began your role as the Chief Revenue Officer at Alto IRA relatively recently, like just a couple of months ago. Can you briefly describe how you got to Alto, like your journey getting to where you are now?
Yeah, absolutely. So my background is in fintech, but in a very different world of fintech. So consumer lending and software as a service. But I was personally going through and making some investments on my own behalf. And I was just fascinated by this burgeoning world of alternative assets. And one of the opportunities that came across my radar was to invest and get exposure to the art market through a company called Masterworks. And when I went through and decided that I was going to make an investment into a Basquiat painting, I got to the investment funding page and I was prompted with, hey, you can fund this investment using your bank account, or you can fund your investment and pay with your retirement account. And I think my mind almost exploded because I had no idea you could do that. And I wasn't even thinking about my retirement account as a source for making investments into alternative assets. And so when I realized that, I was like, goodness gracious, this is a really exciting opportunity. I have money in this account that I hadn't been thinking about leveraging. And that opportunity was facilitated by Alto IRA. So Alto was the button that allowed me to invest in a Basquiat painting using my retirement account. And from there, I realized I really wanted to be a part of this company's journey. And I joined about 3 months ago.
Wow. Yeah, I imagine it's a common experience among investors who end up on your platform, the realization that they're sitting on this capital that can be invested into alternatives. I've heard Alto's founder and CEO, Eric Satz, talk about starting Alto because he had such a difficult time diversifying his own retirement portfolio. Like he identified the need for the platform when he realized what a hassle the process was. I wonder if maybe you can help our listeners understand historically what one had to go through to invest their IRA account. Like, I think it might be helpful to get some context here. Like, what exactly has Alto changed about the process?
Yeah, definitely. Because I think once you realize you can use your retirement account and you should be able to use it to invest in anything, the question is, well, why do I need to have a special service provider like Alto help me with that? Why can't I just take the retirement account I have and invest anywhere I want? And the answer to that is because the retirement service provider probably won't allow you to. So most of the large companies, a Fidelity, a Schwab, a Vanguard, they won't allow you to invest in anything you want. They restrict you to only investing your retirement account into publicly traded opportunities. And Eric, our founder, he had this realization himself. He was an investment banker turned venture capitalist. He realized and heard through the grapevine that he could use his retirement account to invest in early stage venture companies. And he wanted to do so. And he reached out to his financial advisor and said, hey, can you send the check here from my retirement account? And the financial advisor said, I actually can't help you because I'm not at the liberty to be able to use your retirement account in that way. And so that allowed Eric to understand I need a special service provider called a custodian that will allow me to take my retirement funds and invest in anything I want. And he found a few of those companies and he opened accounts with them, and it took a long time. And then he tried to make investments into alternative assets using that account, and it took even more time. And it involved actual paper, physical paper that you had to sign. And this was 2015. And he thought, how is this possible? And then it cost upwards of, $1,000 in that instance to make one or two investments into early stage companies. And he just realized, one, people should be aware that your retirement account should be accessible to invest in anything you want. And most people just aren't making that connection. As a sophisticated investor, he hadn't made that connection. And then there are two structural issues that once you have that awareness, you need to be able to get past. And that is both, this should be easy to do, and it should be cost effective. It shouldn't be so expensive that it's prohibitive for most investors, and you need to be investing a lot of money to make up for the fees. And so he started Alto because he believed that he could address those three problems: awareness, cost, and complexity. And so our whole business model and the value that we provide to individuals is focused on helping them know they can do this, helping them do it easily and fast, and helping them do it in a very cost-effective way.
That's really interesting, especially knowing that he was already in the finance world, should have had an upper hand to be able to access that type of investing, and still was given the runaround.
I know. I still struggle, honestly, to comprehend how this is possible. And I try to validate it all the time. We have the opportunity to talk with a lot of sophisticated, experienced investors on a regular basis. And I was talking with someone in my network who experienced angel investor, was also a fintech CEO, has made 60 plus investments into early stage companies. He had no idea he could use his retirement account to invest in alternatives. And his question immediately became, okay, well, I'm in a fortunate position where I have funds both in a retirement account and in a typical taxable account. Why would I want to invest out of an IRA? And as soon as he understood that this was a tax advantaged way to invest, and it was very well positioned for alternative investments, it blew his mind. He went off on this Slack chain with other angel investors. They all had similar experiences. We're using the emojis of their heads exploding. So I still struggle to understand why we don't make this connection, but for whatever reason, it is common that people just don't know you can do this. And as soon as they do, they're amazed and want to begin doing it immediately.
Right. Yeah. The piece about the tax advantage nature of the investment, I think, is something that's one of the most fascinating aspects about using your retirement savings for that, or your retirement investments for that. Can you just sort of go over the brief, why it's tax advantaged, how that works?
Absolutely. So here in the United States, we incentivize people to save for the future in designated retirement accounts. The way in which we do this is individuals can put pre-tax money into a retirement account, and that account can grow tax-free. So meaning any returns on your investments, you're not taxed on until you withdraw those funds upon retirement. Or you can open a retirement account called a Roth, where you've already been taxed on the money you put into the account, but then any gains from your investments are tax-free forever. And so the incentives are really strong of, we want to be able to help people save for the future. And I think as soon as people understand that and know that they can use this tax advantage funding to invest in longer term illiquid opportunities that might also be higher yielding, that duration matching and that liquidity premium that you can receive through these longer term investments, it all comes together to make a really compelling opportunity for investors.
Yeah, the idea that you can put your pre-tax dollars into a traditional IRA, but then manage to manufacture capital gains with that you're still not paying tax on as you're doing it is,
it feels like cheating.
Yeah, I feel like the self-directed IRA thing is going to at some point it's got to just blow up, right? All of a sudden everyone's going to realize, wait, what have I been doing?
100%. I mean, the classic example here is Peter Thiel took $500,000 in his Roth IRA. So he'd already been taxed on those funds. He put it in a Roth. And so any gains from investing out of that Roth account were tax-free forever. He took $500,000, invested it in Facebook. It went on to be more than $1 billion, and all of that return was tax-free forever. And it feels like it's cheating. And on the traditional side, you can invest, put pre-tax dollars into account, but then all of the returns you get, you can continue to invest without being taxed. And so it's utilizing that eighth wonder of the world, compound interest, and compound returns in a really smart way. And my hope in joining Alto is that more and more people, whether they're working with us or someone else, are aware that they can do this, because it does have a meaningful impact on their ability to live the lives they want later on with the financial security and flexibility we all aspire to.
And I should do my job here as the host, and I think it's important that we at least make the distinction that for those who need the clarification, a traditional IRA is an IRA that we can put money into that won't be taxed until we take it out, assuming we wait until we're 59 and a half. Is that the cutoff point still?
Yes.
And oftentimes the big benefit there is that likely your income tax bracket will be lower as a retired person than it will be during your career. And on the flip side, a Roth IRA would be a retirement account where you can invest earned income during the course of your career, and because you've already paid your income tax on that money, it's considered taxed when it goes in, so it doesn't get taxed on the back end. I did that right?
You did. And, for someone that's not in the IRA business, I think you did that really well. I'm living and breathing this every day, so I appreciate you drawing that distinction for the folks listening here, because exactly as you said, traditional is you put it in pre-tax, and when you take it out, you're taxed. And Roth is you've already been taxed on the money that goes in. And so when it comes out, you don't pay tax on either what you put in or the gains that you've accumulated over the course of that time period.
Right. Yeah, I can't stress that enough. That's the element that makes this sort of controlling your own investing inside of these accounts so powerful. It's amazing.
Absolutely. And the thing is, for most individuals, some less than 5% of their retirement accounts are invested in alternative assets. So they're putting the money in ETFs or mutual funds, things that aren't as diversified as they once were, because public companies have dropped significantly over the last 20 years. More and more entities are staying private. More and more opportunities that are exciting and provide meaningful diversification are private. And so if you're going to take control of your retirement future, you really should be self-directing and deciding, hey, I'm going to determine where to put these funds and how I want to allocate these dollars.
A lot of our investors at Equity Multiple talk about specifically being interested in offerings that benefit from like a current or preferred return, meaning they're actually getting a payout during the duration of their investment, not just at the close of the offering. I'm trying to understand how that works in the context of an IRA or a 401k or something. You wouldn't get that payout to your pocketbook, right? That would be back into the retirement account?
Yes, that's a really good distinction. So if you're investing out of a qualified account or a retirement account, as you mentioned before, you really can't touch those funds without a penalty unless you're at least 59 and a half, so entering retirement age. And that's why the government does provide these tax incentives, right? They're trying to align your incentives to save for the future. And so if you decide you're taking that money out early, they are going to have a penalty in place for that. But you can take those returns and invest in something else from the IRA and continue to accumulate growth and gains over time. But no, you couldn't go out and buy a purse or a personal home with those funds and not risk the qualified standing of your retirement account.
Right. Do you see, once people come once they open an Alto IRA, do you see generally really active investors? Like when someone's thinking about starting a self-directed IRA with you guys, is that how active do they really need to be once the door is open?
That's a great question. So I think it differs a lot by the type of investor that we serve. So we have a few different types of investors that we see commonly. One of our IRAs is a crypto IRA. So you can actually directly buy crypto in your IRA and trade crypto, and all of it gets that tax advantage benefit of growing tax deferred over time and potentially even growing tax free if it's a Roth. So there, in the case of a crypto account, we see a lot of trading and activity. For some other investments, it's much more of a, hey, I'm going to make this investment. I know it's a longer term investment. And so one of the reasons I want to use my retirement account is because of the duration matching. I can't touch these funds, and this opportunity is going to take 5, 7, 10 years to mature. So it's a great way of matching the funding source with the investment opportunity. So it's very bifurcated between those who are making long-term investments and not going on to be active and to trade versus those who are wanting to participate in more active trades, such as a crypto product.
Right. Yeah, I feel like, as we've seen with many of Silicon Valley's crown jewels, like leveraging technology to disrupt legacy institutions often invites customers into a marketplace who were previously excluded, like, by offering investment opportunities on the internet, on a web-based platform. We see a different type of person or different types of people deciding to invest using that technology. And I'm wondering, do you see that too? Like, does Alto's clientele differ from that of a more traditional IRA custodian?
Yeah, I think I love this question because this was my experience, right? So I was that older millennial who was just getting into active self-directed investing. Previously, I used Betterment and did robo everything, didn't want to be involved. And then as my own level of investment interest and sophistication grew, I wanted to have more direct control and start to spread out my investments over different types of offerings. So I think at the heart of who Alto is and the value proposition we're aspiring to, it's enabling more and more people to participate in the alternative investment landscape at various places across the income spectrum and the investor sophistication spectrum. Right. And the reason this is important to us as a company is we think this diversification matters. We think that it's meaningful in getting people to where they want to be from an investment return standpoint and therefore a financial security and flexibility standpoint. And so we do see a lot of people that are coming to us that are making their first alternative investment that maybe are not accredited investors. And so they're taking part in regulation crowdfunding or regulation A opportunities that previously would not have been accessible prior to the Jobs Act just a few years ago. And so we do see that investor come to us. It's not the majority of the investor that we see. And I think that's because for the more sophisticated investor, for the person who's been doing this for a long time, they see Alto and they're like, you're a better mousetrap. I've done self-directed investing. I've done investing out of an IRA, and I just think you're faster and you're more cost effective. And so I want to work with you. That's the majority of our user base right now, but we want to lower the cost, lower the complexity, and increase the awareness so that more and more people can take part in this market.
I wonder if you can just take us through the basics of investing with Alto. Do I have to start an IRA with you specifically and invest like my pre-tax income directly with you, or is it possible to transfer money from a pre-existing IRA? Like, just walk me through the basics of how I get hooked up with you guys.
We get this question a lot because, and I even thought, I didn't realize you can have multiple IRAs and retirement accounts. There's no cap to how many retirement accounts you can have. There is a cap to how much money you can put into a retirement account each year. And so in order to get started with Alto, you would go to our site, click sign up to open an account, and then you would choose what type of IRA. So is it a Roth? Is it a traditional? We even have the option for a SEP IRA. And the next piece is now, how do you want to put money or fund your IRA? And in funding, you can either do a cash contribution. So that's where those annual contribution limits come into play. It's $6,000 if you're under 59 and a half, and a little bit more if you're over. But if you don't contribute from a bank account, don't do a cash contribution, you can transfer from another retirement account, whether it's a 401k with a prior employer or an IRA you have somewhere else. And to transfer money from another retirement account, you can choose to transfer some of it or all of it. It's really up to you. So what we see most commonly is if people are investing a small amount into alternative assets, they'll open an account and just fund it with a bank account ACH, so money directly from their bank account. If they're wanting to be more aggressive and invest in more alternative assets, more than the amount that they could contribute on an annual basis, then they'll open an account and transfer from another retirement account. Generally, it's a partial transfer, maybe $25, $50, $100,000, whatever makes sense for them.
Sure. And then explain to me the fee structure. Like, how do you guys get your cut?
Yeah, so this is something that we think is very strategic to us as a business, is we want to be the most cost-effective provider of self-directed IRAs and retirement accounts. And so our fee structure is very simple. We charge based on whether you have an account with us and when we make investments on your behalf. So there's an annual account fee that's based on if you have an account with us and how big it is, but we cap that out at about a third of the max rate that other providers charge. And then we charge you whenever we're making an investment on your behalf. So if you were to come to Alto, open an account, put money in that account, and then say, I want to invest in equity multiple, we may charge you $10, for instance, to make that investment on your behalf.
Wow. You make it sound so simple.
It is so simple. That's the crazy part, is I think people get hung up in there's a lot of nomenclature and acronyms involved, but an IRA is just a tax-advantaged way to invest. It's just putting money in a place that you can't touch for a while, but you get a lot of benefits from it. And then once you have money in an Alto IRA, really, you've got the world at your feet. You can invest in anything you want so long as it doesn't conflict with IRS rules.
Right. Tara, thanks so much for doing this. I really appreciate it.
Thank you so much for having me. I've really enjoyed it. We're huge fans of Equity Multiple. I'm always happy to be talking with great partners like y'all.
Yeah, the feeling is mutual. Thanks again to my guest, Tara Fung. A special thanks this episode to Nashville-based musician and composer, and incidentally, Tara's husband, Johnny Fung, for engineering the audio on their end. Thanks to you for listening to Multiple Perspectives. Don't forget to subscribe to the show in your podcast app of choice. For more information and to see the offerings currently available on the Equity Multiple platform, we've got links in the show notes. For Equity Multiple, I'm David Lofgren. See you next time.